there are various terms which we need to define, for or before we can look on how we prepare the statement of cash flow. So we look on the definition of terms, definition of terms. The first term here is something known as cash. Now, in our case here, when we talk about cash, as far as the preparation of the statement of cash flow is concerned, this comprises of three items. This comprises of comprises of one, cash in hand, comprises of cash in hand. Two, it also comprises of cash at bank, stroke now the bank overdraft. And number three, it also include what we refer to as the demand deposit. Now, when talk about what we refer to as a demand deposit, this is the amount of money which may be held by an entity in a fixed deposit account, and for an entity to be able to access that particular amount of money, maybe it need to give the bank a short notice, like 2-week notice, 1 month notice, so that now money can be withdrawn from that particular account. That is form of cash, but in our case we refer to that as demand deposit. Now, the other term is something known as cash equivalent. Cash equivalent. Now, when talk about what refer as the cash equivalent, this refers now to the short-term investment, which can be converted into cash within a short period of time. For instance, if at all maybe a company has invested in government treasury bills, or maybe treasury bonds, or maybe a company holds some shares which are trading in securities exchange market, the company can be able to sell them or to convert them into cash within a short period of time, and therefore the cash equivalent here will be taking the form of the short-term investment. So therefore we have said that the cash equivalent, these are short-term investment, convertible into cash, convertible into known amount of cash, cash within a short notice, So that's now what we refer as the cash equivalent. Now, the other term which is also, or which we need to define, is something known as cash equivalent. That is non-cash items, not cash equivalent, non-cash items. Now, when talk about non-cash items, these are those particular items of incomes or expenses which do not entail movement of cash. When talk about an item which do not entail movement of cash, we are talking of an item which do not entail cash outflow or inflow of cash into the business, though it is treated as an expense or as an income in the income statement. Therefore, good examples of the non-cash items include items such as depreciation, include items such as bad debt written off, include items such as gain stroke loss on what? On disposal, the provision for doubtful debt, and so now those items we use them in the computation of profit, but they do not entail movement of cash. So therefore we have said that the non-cash item, these are items which do not involve movement of cash, e.g. depreciation. We also have the gain, stroke loss on disposal, we also have things like bad debt written off, etc. And therefore, when preparing now a statement of cash flow, as the name suggests here, we only use those items which entail movement of cash, because by the end of the day we have said to compute the net cash flow from either of these activities, we take the cash inflows less the cash outflow. So those are basically some of the terms which you need to be aware of.